What's going on, people? It's GBP baby. Welcome to part 2. We're looking at Euro USD. This is episode 14, I believe. I'm not even sure, but yeah, let's get straight into it. Yes, last episode we done all of this on the Monday. I'll make sure to upload this to the Discord, and then we are going to get straight onto part 2, which is here. So you know the drill. Sit back, relax, enjoy. And yeah, this isn't very nice price action though, I'll tell you that. Look at this. It's starting to look a bit like a commodity index. So I don't like any of this, to be honest. I'll tell you what, this move here, this is tradable. So I'm gonna start off here because this is not good. And you can see how we trade down, taking out south side, stops below this low, and then we trade right up, take out buy side. So what we're looking for now, south side, that's what we get. But let's look at how price gets there. We have a breaking market structure here. As soon as this candle closes, we then anticipate fair value getting traded to, and break at, and then trade lower. Why isn't this the breaking market structure? Because this is a swing high, this is a swing high, and this is a swing low in between. We have the fair value gap that's respected here. So we have sell stops resting below here, and then we can let off half of our position here. And then it's important to look at how price treats this. It's always important to look at how price dives in, takes out south side liquidity, touches the Monday opening, turns around, and then you can see pretty much consolidate for the rest of the day before trading higher in the new day, much higher in the new day. And also I want to mark out how this trades into the 50% level of this bullish order block even. So we have bullish order block there. And then what I'm going to do is I'm going to split this range in. Let's just get straight into it. So we got the low of Asia there, and then we want to get the high of Asia, which is here. And you can see how we take out the south side of Asia. So what can we anticipate? The buy side of Asia, and we have relative equal highs just in here, here, here. So this is classic. This is a classic, you know, a classic piece of price action right here. I'll show you what I mean. So we have buy side resting here, relatively equal highs. We trade down, then we have a breaking market structure. And we also have an entry here, and then also in this fair value gap here as well, with a breakaway gap. Being able to buy as it's taken out this low is a goal of mine, so I'm going to put an entry there because it'll be nice. It's going to be nice when I can get to the point where I am entering at such a, such a, you could say, risky place. So fair value gap there, a breaking structure here. Excuse me. And then we have entries all along here pretty much. So I'm going to just mark out all these fair value gaps. This one will probably be a more realistic one. Why? Because we have the breaking market structure, and with the fair value gap resting here, you can see we trade down to it twice. And you can see how this bullish order block here continues to show support. It's actually these two candles, so I'm going to mark that out, and that takes us to the 50% of this range. Can't make this up. And you can see our prices continue to respect the 50% level, so I'm going to make sure I mark that out. And then I'd let off some of my position gets let off above this buy side liquidity, so be that off here. I could add more to my position here, and then I'd let off the rest above. We've got swing highs here, here, and up here. But you'll see that there's a fair value gap here, which is quite a good spot because we know that price has used that range before, and we see we trade into it here as the consolidation hits. So I'm going to put this here, get rid of this like that, make this dark red, and then we'll start looking at the the New York session. I'm also going to mark out the 50% of the range that's created between the end of the London kill zone and the start of the New York kill zone. And you can see how we refer to it right here. I find it interesting our price does refer back to it, so that's definitely something to take note of if you want to be trading New York. Consider the fact that it's going to refer back to the range that was created in between London and New York. Look how it supports 50% level of this gap, leaving it open. So this acts as like a measuring gap. And then we have a breakaway gap here. We also have a gap here as we take out this high. These are all gaps that I want to see left open. Find support on top of this. I think it's important to take note of these things. Where the bullish order block is created, like look at this. You can't make this up, guys. There's no one that can tell me this is not algorithmic, you know? And you can see our prices keep stacking and stacking and stacking its way up. Look at that. We have another entry here, but obviously that's after what is it? That's after the end of London, so we wouldn't be trading that. But this here is all an entry, so I'm going to put that in for long. We do have a breaking structure here, take out swing high, and then we have a breakaway gap. And when price crosses here, what do you call it? It's called immediate rebalance. That's what I need to start highlighting, actually, immediate rebalances, because I haven't been recognizing them, and they can be used as entries. Why is it immediate rebalance? We trade higher, trade down, touch this. So this whole range now is being rebalanced, and you can see how price treats it later on. You know, it uses that support, which is very interesting. We do trade to the order block as well, but there's a fair value gap there. So I'm gonna take notes of that as well, but it's just interesting to see. So you can see prices trades higher, stacking. There's not really much going on until we hit 2 p.m. and we just break away. As soon as the central bank dealers range, we break away, trade back down to this area here where we had a consolidation. Remember, this is pretty much a balanced price range. Trade down, up through it, and then we have another central bank dealers range from here onwards. It's possible I might have already analysed this week, actually. This looks familiar. But yeah, let me just go back over here and have another look. I want to mark out this breakout structure as well. See if we can see. Let's see if we can see the breaking market structure that happens here. So this is when price starts breaking down. We also have a fair value gap here. You can see we got offered entries. Price stays relatively below it. Well, literally below it. Also, the fact we trade down past these lows and these lows, you know, adds reason as to why we should expect lower prices. But for it to move like this, remember this is a 5-minute candle, and we trade right down into this fair value gap. This is where volume refers back to. So in this case, I'd be selling probably as soon as price trades into that fair value gap. Then we have sell side resting here. We've got sell side resting here. We've got sell side resting here. And you can see we just run right through it, right down to this fair value gap. And then we consolidate a little bit. Go on to Thursday. So I'm gonna just take the lines over the dividers and do the same thing. Mark out, and you know the drill, I'll mark out the high of the Asian range, mark out the low, mark out the midpoint, you can see we take out that sell side, but we come and take it out twice. As in, we take it out here, we came higher, we failed to reach the high, and then we trade lower again as thingy starts. So when we see this moving lower as London starts, we can anticipate this low getting taken because it's going to be going to some kind of sell stops. Although you could argue, why isn't it going for this fair value gap? We actually trade lower than it. Yeah, that's interesting because I would see this as an entry, as in I would want to buy here, but you can see price continues to dig deeper and lower. Anyway, price trades higher. When we push through this high here, create a fair value gap, we come down and give us an entry at the 50% level. So let's take note of that. We also have a breaker, well no, mitigation, swing low, higher low, and this is the swing high in between. And you can see that we touched that here, so I'm going to mark that out as an entry. Mitigation. And then what I do usually is I look at the total range I'm trading, and at the 50% level I usually let go of my stops. So I let go of my stop here, and then remember we anticipate price come back down to 50%, so this is another entry technically. Hopefully I made sense then. When I'm trading and I get in at the low, as in I get in around here, I let off 50% of my stops at the 50% level, and then I'll see how price acts, anticipate this kind of support being found, and then I expect it to run into the actual highs, and that's what we get happening here. So let's just mark out, and then I'll let go of all my stops. At this high here. We trade to this breakaway gap, which is interesting. Right, so let's mark this out as buy side. And then remember I like to look at the range here. This was a very bullish week for the euro. Very bullish. Why is this a breakaway gap? It never got traded to. It's after a break in market structure here. And yeah, we can anticipate something like that happening. So I'm going to mark that out as a breakaway gap. This. And we trade into the actual order block itself. And we have another breakaway gap here because we trade above, and then it touches on this. I always find interesting when price comes back down. I see this not as immediate rebalancing, but I like to see this. This is like a signature to me. When it trades above this little swing high here, we have breaking structure, so I don't want to see it really trade back below this low. Also, there's an inverted fair value gap here, so there's a level of protection. Yeah, you could argue that is protection. So got inverted fair value gap here. And then we got this, what I like to call an inverted order block, although that's not what it's called. And then it's this, how the candle comes down like this. This is an entry in itself. My stop would go below this, well then bottom of this candle. It's interesting to see how where we stack up. Like here, look, fair value gap here, inverted. Like we keep seeing these inverted fair value gaps on the way up that it trades through. So now I don't really anticipate price want to come back down here. I let go of some of my position above this swing high that was created during the between ranges, kill zone. Sorry. So this swing high would act as buy side liquidity. how we treat that 50% level. Can't make this up. Trade higher. We get straight into this swing high here, so more buy side liquidity resting up there. These are all levels that you anticipate price trade to. We do have breaking market structure here, so this is not very cool price action. I mean, but you can see that at this point, I guess I'd just be waiting to see if we want to break lower than that 50%, but look how we respect that. Price closes above it, we trade higher, and then we have a breakaway gap as well that gets formed here. And with an entry here. And then we trade higher, just consolidate. I can't imagine. Oh, that was Wednesday. Oh no, this is Thursday. This is Friday. Cool. I can't imagine there's much that happens on the Friday with a big move like this. Yeah. You see what I mean? How I was when you have a big move all week like that, Friday, I don't really expect much price action. But ICT has said something about the retracement being 20%, 20-30% of the Friday's range. So let's have a look at that actually. Let's see if that's if that is if that statistic is verifiable. So here we have .2, 0.3, and we'll make them orange. And yeah, we refer to 20% of the range. Interesting. And what's also in that? Can't make this up. I am going to finish this up now because this video has been going on for a very long time, so I'm going to bring this to an end, but I'm going to make a line here. I think the central bank dealers range is relevant here. Let's have a look. And I'll show you why. So we got one standard deviation, and we should cast down two standard deviations, 1, 2, and that takes us to 20%. But I'm not going to get too much into that right now. So standard procedure, high and low of the Asian range. And remember, I like to work out the 50% of these ranges too. So you can see we consolidate. We trade much higher as we enter into the London range, taking out relatively equal highs here. And then we have a breaking structure as we trade back down with an inverted fair value gap here. Because there's actually no entry on this move up, so we'll just have to be waiting at that point. And this would be an entry in this fair value gap here. You see how we don't even close in it, but we'll be looking for shorts at this point. Why? Because we have a breaking market structure here, and we have relatively equal lows resting here, so we have something to attack. Also, we're taking out the buy side of Asia. Nearly finished this episode, guys. This one is probably one of the longest. Yeah, by far. In fact, I might split this into 2 different parts. And we consolidate, move higher, break lower, move higher again, and then we run for this 20% range. So all of this between here and here, I'd say is a balanced price range. We should leave it. Yeah, you can see price then leaves it. It's crazy. So from here to here's balance, so you can see how we touch it. Monday starts, and then we trade away from it aggressively. We break lower here. So I can imagine that week from then on, trades lower, and then we trade even higher, and then we have the reversal. So this reversal that happened 22nd of June, I am going to look at that. Is it a reversal? Yeah, I believe it is. Yeah, I'm going to look at that another week, but that pretty much brings us to the end of this video. Fridays I don't really like trading anyway, to be honest. It's pretty consolidated, isn't it? Yep, so that's everything, guys. This has been GBP Baby. Thank you for watching this backtesting video, and I'll see you in the next one. Peace.